Thank you for staying with us for the last panel of the day. I'm sure everyone is excited. I saw some great asado outside. But before that, we have a very interesting panel today, Redefining Compliance in the Age of Privacy Tech. I have some great panelists with me. So maybe we get started with a brief set of intros and the projects you're building, what excites you in the privacy space, maybe. I'm going to start with myself. So my name is Bianca Buza. I'm head of DevRel at Chronicle, the Oracle for tokenized assets. Chronicle has been around since 2017. In 2023, it spun out of MakerDAO. And today it continues to power assets across the DeFi and tokenized asset space. Maybe Nicole, do you want to go next?
Sure. Hi, I'm Nicole Farrar. I'm the co-CEO of O1 Labs. And prior to being that, I was the company lawyer. O1 Labs launched the Mina protocol. It's been almost 5 years ago now, in March. And our blockchain is basically the first, fully ZK native blockchain that is, and first and only succinct blockchain that allows for off-chain execution and then on-chain verification.
Hi, everyone. I'm not Peter in disguise. I'm Julia. I'm a co-founder and head of investigations at Zero Shadow. Zero Shadow is a cybersecurity partner for different Web3 protocols. We have more of a preventative, can you make sure that you're prepared and preventing hacks? And then if you do have some kind of incident that happens, we're a partner with you to try to help follow and recover the funds. And what I'm excited for with privacy is being able to walk that balance to have people have privacy when they want it and they are doing good, and also have a way to be able to prevent bad actors from being able to launder money.
Hey, I'm Nikhil, co-founder and CEO of Predicate. Is that too loud or is it okay? I feel like there's a big echo. Okay, great. So yeah, we build on-chain policy infrastructure. So we work with a number of organizations on how they enforce pre-transaction rules for what goes through their smart contract. So folks like Alio use us for essentially setting AML policies that are enforced pre-transactions. So certain transactions actually don't even go through their smart contract when you bridge to Alio. You guys might have seen some of Aztec's launch recently. So a lot of the compliance infrastructure for their tokens, for their token mint was through Predicate. We work across the space. We work with a lot of privacy projects. We work with a number of RWA and stablecoin projects. But generally, our whole system is how do we ensure that certain transactions as needed by the developer or the organization don't go through per compliance requirements.
Let me see. Okay, that's cool. Hey guys, first of all, thank you so much for coming and congrats to all the organization for this amazing event. My name is Ojeda, so you might call me crypto lawyer on socials. I've been in crypto for the last 10 years and I've been working in crypto compliance for the last 8 years. I founded the first crypto legal firm in Latin America, which is Legalrocks, my firm. We've been advising exchanges who wanted to enter into Latin America. We've been advising central banks, VCs, institutions, and even private banks who wants to basically start exploring cryptocurrencies, but they don't have idea how to do it or how to do it in a compliant way. So that's what we've been doing. In the last 8 years, we've been part of amazing regulatory process in various countries like El Salvador, Panama, Colombia, Venezuela, Argentina, and many others, where we've been basically designing the current cryptocurrency frameworks. So we're very happy to do that. And at the same time, I've been also pretty involved in privacy teams, like for example, Telos blockchain, which is a blockchain more focused on privacy, and CK Tech, which has led me to this amazing experience to trying to bridge, payments and private tools, which is kind of contradictory for regulators. But that's been also part of what I've been doing lately. And now I'm part of the team of New Capital, which is a stablecoin infrastructure protocol. And basically what we're doing is offering yields in a safe way, in a transparent way, and an institutional. We've been partnering with banks and institutions in the region, and we're growing so fast, and I'm so happy to be part of it. So let's say I always like to say that I'm like it's going to be maybe weird, like Hannah Montana, and having the best of both worlds because I've been in privacy and regulatory, but at the same time, I've been pretty involved in BD and partnerships. So I bring a little bit of everything. So yeah, that's a little bit about me.
Thank you so much, everyone. Maybe we start with a bit of an overview of the current existing status quo, if you want, of the space. What would you say it needs to improve in order to have proof-based compliance become mainstream? Do you think it's we need better tooling, standards, maybe legal clarity? What's your take on that?
I guess I'll go. I think all of the above, but in my opinion, coming from the legal and regulatory background, I think having regulatory clarity is probably the most important because right now it's not really clear that you can actually use this kind of technology to meet those compliance requirements. And so I think the first step is educating regulators on how the technology works and proving that it's actually valid and can be relied on just as much as the documents themselves. And then I think it's advocacy and pushing for changes in laws or safe harbors, things like that.
Yeah, I would agree that it's all of the above. I think we've been coming a long way in the past few years from a few different ends. I think from the regulatory government side, there's been a lot more education, even if it's not all the way there, that not everything is going to be a mixer. There's a difference between privacy and mixing, that institutions that are coming into this field want to have some level of privacy. And so there's that demand element that's not just necessarily that like completely cyberpunk ideal. And I think on the other side, the privacy creators starting to get less from the idealistic, we can't have any safeguards, to trying to find, well, how can we make this become something? And so I think the next step in my eyes is really the tooling and making some clear applications where we have a way to have privacy, but also have some kind of KYC be possible, or maybe in a ZK way have KYC be possible, and then kind of meet in the middle there. So yeah.
Yeah, I think echoing everyone else, I actually think the industry hones a little bit too much on just regulatory at this point, is my hot take. And the reason why is, it really comes down to, I think there are a lot of different use cases that you have through blockchain technology, right? Especially privacy. But now you're actually, I would argue, starting to enter into a world where you need to have a more nuanced product approach around, so what is the AML requirements for different things? Are you doing payments? Are you doing like yield? Are you servicing a financial institution? Are you servicing a financial institution in the United States? Or is it, in another country? This starts getting highly nuanced. And I would actually argue that I actually don't think the product is quite there for zero knowledge proofs yet for a lot of that. I think zero knowledge proofs are great. I think we've had in terms of showing that, oh, I have a passport with a valid ID, but that is not compliance when it comes to institutional grade use cases. And there's still a lot of work that has to happen on that. And I think the best thing you can look at is if you take a look at the compliance settings offered by traditional tech companies, like your traditional fintech companies when it comes to compliance services, it is significantly more sophisticated. And it's not like a random thing that it's more sophisticated. It's because there's a much broader set of needs. So there's that. And then the other point I should add is I think there is a lot of also incentives by existing organizations in financial services as well as fintech for data collection is actually a valuable thing, right? It's not so much that, they don't want the data. There is a valuable aspect of having the data on their customers because you use that as part of your business mode. And so there's that component as well to navigate.
Well, that was a pretty hot topic indeed. I think that we're missing maybe regulatory clarity, but not regarding of using tech, but regarding how legal it is to use tech or CK proof of any other of these technologies precisely for compliance. So what I'm trying to say is, if regulators doesn't say or state or make a law where they basically agree that this is legal, we can be here like discussing for, I don't know, 10 years about how magnificent is CK Tech or any other tech that it's going to show off, and we will still in the same phase. Because right now what we don't have, it's, let's say, this standard, the legal standard from the regulatory perspective. So what we need right now is something pretty similar to what Euro just did with MiCA. Obviously, I'm not saying that MiCA is the best regulatory framework, but since we don't have that, it's going to be pretty difficult to have this technology succeed, because you maybe be compliant in a country, but maybe in the other 10 countries you're not compliant, what you're doing is illegal. So I think that's a missing part of it. I maybe have a little bit different vision than you. I do think that the product itself, the technology, I think it is ready, but I don't think it's ready from a compliant perspective. Yeah, so for me, that's the missing key there.
I should also just add, I'm probably coming in with a bit more of an American view, where most of that is done on a principles-based approach, whereas you would say that the US should take a principles-based approach, which is very different from how MiCA might be done, right?
I heard a lot about education among you, whether that's educating the regulators, the users. So I'm wondering, maybe in this context of education, what would you say it's a big misconception that people have around privacy-driven compliance?
Okay, let me start because this one is so controversial. Look, we've been discussing with several regulators in Latin America, and in our first conversations, they were like, how I'm going to explain this, I don't know, to the assembly, to the deputies, to politicians, or to, the AML regulators in the country, because I'm not going to have the data or the sensible data. How I'm going to be able to review all this information only with a proof based on a technology that I don't understand? So that is one of the most common questions or concerns that I've seen that, at least in this region, regulators have. And the second one is that I think they are maybe confusing regarding the approach of CK Tech, because they rely, or they think that privacy is equal to being anonymous. So sadly, there's been too many actors in this industry, too many bad precedents, and that it's basically shaping this vision of the regulators that privacy is equal to basically being a money launderer. So that is a misconception that we're having in the industry. And in fact, it's kind of funny because I think the banks and the economies are the ones who are pushing this narrative, because when you see, for example, last chain analysis in forms of cryptocurrency crime adoption, what they say is only 1% of the all transactions on chain are coming from illicit funds against the 30% in fiat. So you have the data, you have the metric that crypto isn't the best way to money laundering. But obviously, this is a narrative that it's being pushed by regulators. So I would say that privacy is not equal to being anonymous or to being equal to being a criminal. And it's not casual that narrative. It's going to be, it's being every day and every year it's going to be more pushed by these big institutions who obviously they don't want to crypto go mainstream, and so that's it.
I have another thought on education. I think education means not just tell me how it works, but actually show me how it works. And so just like how, when companies first started tokenizing securities and bonds on chain, there was a duplication. There was still the paper traditional route. I think before we can get lawmakers and regulators to really adopt this technology, we have to put it in action and show them that it works repeatedly and that it can be audited. So I'm excited to hear that companies like Predicate are doing that.
I see we have a new addition on the panel.
I'm so sorry. I
Welcome,
misjudged
Peter.
traffic really badly.
Maybe do you want to give a short intro about yourself, and then we can
Sure.
continue with the question?
Of course. I'm Peter Van Valkenburg. I'm the director of Coin Center, which is a independent nonprofit based in Washington, D.C. We educate people in government about cryptocurrency and open blockchain technologies. And we do actually have a pretty big focus on privacy and privacy-enabling technologies. For example, we sued the U.S. government to get the Tornado Cash contracts delisted after the sanctions. And those sanctions are now delisted, so good outcome.
Thank you. Do you have a misconception to share with us about privacy tech-driven compliance?
I mean, I think I gave a speech at DevConnect the day before yesterday, making the case that I think the best reason for privacy is not necessarily what activists usually say, like human dignity. I mean, that is a very good reason for privacy. But I think existential to the long-term health and survival of permissionless blockchains is base layer privacy, actually. Because without it, there will be an inability to credibly be neutral as a validator or as an underlying part of that infrastructure. And without that credible neutrality, you will have endless mediation of disputes. You will have an endless attack surface for nation states. You will have an endless place where two validators or two participants on the blockchain might just try to sue each other based on the publicly available information and the sense of deceit or failure to maintain certain inchoate obligations that you get from that inherent publicity. So I think if we really want dumb pipes, the pipes need to actually be blind to what's going through them. That is a very different take as to why maybe we want privacy in blockchains than the typical, which is the users deserve privacy. And I think they do. Or that businesses deserve privacy, which is definitely a provocative and important use case now that we see more institutions coming online.
Thank you for that. Maybe changing a bit the topic. How do you think zero-knowledge proofs change the way institutions meet AML, KYC requirements while minimizing data exposure?
I can start on this one. So I will say right now they can't for institutions for a few reasons, right? So one is, we've touched on it a little bit from a legal standpoint, that an institution is not really well positioned to say, oh, we're using a zero-knowledge system in which we have no idea who it is and we are therefore compliant. Doesn't land super well. That's one. So it's not quite there yet. The other part, and I think we gloss over this a lot, is, I think, Peter, your paper actually on, I'm blanking on the name, was excellent about talking about this. I'm glad you made it. Is actually a lot of when it comes to compliance is it's real time, right? These are things that happen, especially when it comes to financial institutions. You know, we talk about blockchains moving capital faster than anything before in a more programmable manner. What that really also requires is you cannot have static-based systems as it relates to compliance. So me saying that I'm over the age of 18 is not sufficient for compliance in most cases for financial institutions. Me simply saying that I have a passport in the US as a US citizen is also not sufficient when it comes to financial institutions for many use cases when it comes to compliance. So it's much more real time around what different data pieces are being used. There's obviously a tension here with privacy, right? But what data components are used? Like, what is the real-time pieces? And then there's an entire additional aspect right now where even things like, it's not just KYC, it's real-time enforcement. There's also a question around KYB, right? So there is no ZK KYB solution right now, unfortunately. It's actually a very tricky thing to deal with. This is where I think ZK TLS gets quite interesting of some of the things you can do there. But right now, the tech is actually not there for institutions for when it comes to ZK and compliance, along with the regulatory component.
Thank you for the reference to our paper. The paper is called "Tear Down This Walled Garden." It's a thinly veiled Reagan quote. So I think making these proofs both dynamic, so that you can shift what is weighted as far as a risk score, say. Like if we know that a certain identity provider has been effectively compromised or maybe compromised, that needs to be rapidly de-weighted in any kind of risk scoring that we might have. It should be a dynamic risk scoring model rather than a static, we just collect a stamp from your passport, basically. The other thing that we write about in the paper is that this isn't just a technology problem. A lot of the technology is, I think, actually close to being there, certainly for individuals, maybe not for business or know your business. But it's really a collective action problem. At the moment, financial institutions go through these very costly and inefficient processes to collect information about their customers that they're required to collect under anti-money laundering laws like the Bank Secrecy Act in the United States. But that information's not actually fit for purpose and many times and easy to forge if you're a sophisticated criminal. That said, nobody at these institutions is right now going to stick their neck out in front of the regulators and say, hey, there's this cool new technology. What if we stop knowing our customers' names but have a robust 10-point risk score based on these difficult to forge attributes they get from other trusted entities in a zero knowledge proof? Their regulator, who's probably a mid-level bank examiner, is going to be like, what the hell are you talking about? Show me that you did KYC. And so you have a collective action problem. What you really need is, I think in this case, a signal from the regulator that they're willing to actually pilot or try or trial certain alternatives to KYC that could be more privacy preserving and more robust, so that you actually can see people in the ecosystem, in the space, building them because they know they're not building them for nothing. They know they might get buy-in from their regulator.
How do we get that signal?
Lobbying.
Maybe pushing for sandboxes where it's, a very limited, controlled environment where you can experiment. Some, at least in the United States, some states are more open to that than others.
And I think one other thing, while it's not institutions, is just we can show an example of how this is working. I think a really good use case is starting with decentralized protocols. And while they right now don't have KYC requirements, there is this idea of wanting to not allow bad addresses to use your protocol. And I think that's a really good use case for this idea of I don't need to know everything about who my users are. I can just have this yes, good or no bad kind of system. And that's a way to potentially prove that this kind of system could work. And something that we're even doing is curating address lists where they're actually encrypted in transit. And so it's not just going to be like a free list where anyone could see this is all bad addresses, but you actually, if you receive those funds, then you're decrypting that. And it's just that yes or no, that this is good or this is bad. So I think it's just this idea of showing a kind of like beta version and then being able to use that and further that for these like tougher situations like institutions or centralized exchanges where there's a lot more at stake or a lot more rules already in place.
I'm hearing from you that we're not there yet, but let's assume things go perfect and in a couple of years, we're gonna reach that point. Who do you think will be responsible, will hold the accountability part for these things? Do you think it's going to be on the wallet provider, the proof issuer, the users, some other entity? Where do you think? Because it's going to be a whole different system if you think about the data and the accountability. How would you envision that?
I guess I'll take a stab at this. So I think, gosh, I already forgot the question. What can you repeat it?
The accountability.
Yes, accountability. Okay. So I think it's going to be much like other new technologies, a combination of fighting it out in court and contractual statements and agreements. I realize that's, when you're talking about something that's decentralized, who are the counterparties? But even with a decentralized protocol, you can make, the accountability terms sort of part of the protocol that everyone who uses it buys into it. But yeah, I also think there's going to be a lot of fighting when things go wrong. And we've seen that, a lot recently with AI. It's like recent lawsuits with book writers, for example, and things like that. So
the way I see accountability is, I think the cool part of what we're building is you have entire systems that are fully decentralized and are programmatic. And then you have other stuff that have points of centralization. And so really at the end of the day, my view of accountability is accountability lies within the centralized actors, the points of centralization, right? So if it's fully permissionless, everything is decentralized, the accountability is on the individual, right? Or the person who's participating in that protocol. It's not on the developer of the protocol anymore. It's really just, this is a fully permissionless system. Then you have permissionless protocols upon which you can build financial applications. An excellent example of this in my mind is Uniswap, where you have Uniswap as a fully permissionless decentralized protocol. But upon that, you can build custom V4 hooks, right? The accountability then is for certain hook developers if they're maintaining centralized control over that and they're monetizing around that. And so it really just comes down to the points of centralization, who has control, who is monetizing, who has vested interest for that. And that's really where accountability should lie.
So I think dealing with the question of how would somebody accumulate a robust scoring criteria for themselves that signifies their risk that they could then share with people. The simplest way to do that would be to just say, okay, Google already knows everything about you. They can create a risk score for you, and you could passport that around, and they could do checks for liveliness and freshness by, like, you have an Android device, or you sign in regularly with multi-factor. That would be very simple, but of course it gives Google sort of unilateral and complete control over all of your salient characteristics and your identity. And yeah, they could do it internally with some ZK spice in there to claim that they're not being evil, but at the end of the day, it's a very trusted system. This is why our paper focuses a lot on the importance of composability. Just like we think about composability in the DeFi space, we should be thinking of composability in the identity space. You should be able to, as a person on this blockchain, own credentials, just like I own a bunch of credentials in my wallet. And I should be the one who decides when I want to amalgamate them into some sort of credible risk score because I want to access some sort of regulated financial service. And maybe because voluntarily, I don't think they're going to be forced to do it right now, some sort of non-traditional financial service, like something more DeFi-like, has chosen this as part of a voluntary system of onboarding users or of identifying the users, or perhaps a proof of innocence or something like that in privacy pools. But the key to me is that who is accountable, or who is responsible rather, for generating one's scoring. It shouldn't be a new credit rating system where TransUnion or whatever has a bunch of information about you, half of it's wrong, and you have no choice but to become subject of their scoring. It should be, I have the ability to actually own, like paper credentials in my wallet, credentials issued by multiple different parties, prove activities I've done on chain, and if I want to amalgamate that into some sort of credible score of my relative anti-money laundering risk to some particular application that I want to use. I think that's quite an inversion of the current world, although it's actually very much like the old world, where if you went into a bank, they'd be like, all right, let's see the deed to your house, let's see, your driver's license, let's see the things that you control, Do
you think in the future we will reach a state where some of the policies will be implemented directly at the smart contract level?
Yeah, I guess I'll take this one. So at least, I think it depends on how you think about it, right? So our view at Predicate has been, you will have smart contracts that need to enforce certain requirements, especially, we already see this, right? So a perfect example of this is stablecoins. Under US Genius, stablecoins must have, if you're a US registered stablecoin that is Genius compliant, you must have the capability to freeze addresses. That is a smart contract level implementation at the end of the day. Same with tokenized securities. We see that now with different types of real-world asset vaults. These are all smart contract levels. So yes, I actually see that plenty of instances in which you would have smart contract level enforcement of policies. Then it's an implementation detail of how exactly does that work. But in the same way, these are financial products, right? And you can have financial products that involve smart contracts. You can have financial products that involve intents. You can have financial products that are purely a UI and nothing else. And so it starts getting abstracted away at the end of the day. Is I think really where the world goes, but you have to be clear about where do you do that enforcement? Is it supposed to be a permissionless system that things are then built on? Is a message passing system like a blockchain? Or is it a clear financial product? That's the nuance that you have to navigate, and that is where I would say regulation is not fully caught up to, and I think that will continue to still be a conversation for years to come.
Okay, I have two more forward-looking questions for you. How do you think compliance will look like in 5 years' time, let's say?
Well, I do think that we will see better compliance, maybe with less data, with less surveillance. It might be sound a little bit optimistic or maybe like an utopia, but what I'm seeing, at least in the region, is regulators really want to understand not only CK tech, but any other tech, even AI agents or any other kind of technology that can help them to improve their regulatory system, the supervision. And not only regarding the surveillance or having more data from the users, but I see they want to improve how they are controlling users and institutions and banks and how the money is flowing basically to their systems. So I do think that at least in Latin America, we will be seeing at least two regulators, because I have like very good information of two biggest regulators in the region that wants to have this kind of technology, improving their systems and their control mechanism. But at the same time, I also am seeing, for example, countries like Brazil with the development of their CBDC, they are going to a more strict and surveillance way. So I think in the next 5 years, we're going to see like a path where maybe a few countries, maybe a few regulators are going to be against these technologies. And then we'll be seeing like more countries like, for example, US, Europe, Asia, these kind of, continents that are more advanced and they're using cryptocurrency the most, trying to adapt this kind of technologies to improve their compliance monitoring system. I'm not saying that KYC is going to disappear or AML measures or any other of this type of regulation, but I do see that they're going to improve and modernize. And this is something that, for example, we see the Financial Action Task Force. We're seeing a lot of these global regulators, the ban of international settlements. They're doing papers, they're doing white papers talking about these technologies and how they're going to embrace them. So I do think that in the future, we're going to be disclosing less information. I don't know if they're going to be using CK Tech. I don't know, because maybe in 2 years, there's a new trend that emerged and everyone was crazy and want to use that trend. But in general, I do think that their surveillance is going to be, in the majority of the countries, a little bit less, and it's going to be like more efficient. And when I say surveillance, and I want to have this clear, I'm not saying that regulators are going to stop require information or are going to stop monitoring. I do think they're going to start monitoring in a way that is efficient and it's much faster and cheaper for them.
Yeah, to also maybe look from a U.S. perspective, I think that there's definitely hope for the next 5 years to at least give room for these things to grow and give room for privacy to keep flourishing rather than being constricted. And I think a few reasons for that. Last year, the elections really did prove that the people's voice can be impactful, and the ability to try to really push for the specific types of policies that people want. It does have action. It does have effects. I think also it's kind of interesting to think about like the Zcash movement. Maybe that's a little bit of a meme right now, but it's the people saying that they have an interest in privacy, and as that continues to be heard, I think that has been proven to have positive effects, and the regulators are listening.
I think there's also a provocative way to answer this question: is if in 5 years we don't do the right thing that Anna was talking about, and we actually like move towards data minimized alternatives to KYC, if we don't move that way, things are just going to get monumentally worse than they already are. I mean, already Know Your Customer is effectively a lossy, expensive system that doesn't actually deter very much illicit finance. In fact, probably just deters the people that you want to onboard onto the financial system. And with AI and big data in general, the value of KYC, I think, declines, and the ease of sophisticated parties bypassing those controls just goes through the roof. And so I think unless we see a move towards more verifiable, cryptographically verifiable, and robust identity systems, and away from just naive KYC, we're going to be in a world with far more money laundering and far less financial inclusion and just confusion and chaos. So I think there's real pressure here in the next 5 years to actually change things. I don't know if they will or not, but I do hope they do change.
I'm less optimistic, just because I've seen, I've been in crypto since 2018, and we finally got the first somewhat comprehensive legislation on stablecoins just this year, and now everybody's fighting about the Clarity Act. So I don't know. At least in the U.S., I feel like our government is so divided that it's going to have to maybe happen outside the U.S., or if it happens in the U.S., it's going to be because of either an executive order or maybe states take the lead in this, sort of experimentation in this space. So sorry to sound so pessimistic.
I think I have the view. I was actually thinking, I think in my mind, ideally, it's kind of an interoperable system where you're going to have cases where ideally you have more and more, like privately owned data that you own that can be used, that I don't have to disclose everything. I do, however, think that there's still going to be kind of large segments of industries and verticals in which they're going to continue housing data. And the reason why I see that is particularly in the AI side of just large companies continuing to accumulate large volumes of data and that being utilized. So my vision, at least, is a world in which we have not solely succumbed to centralized complete data ownership by external parties, but rather we have a system in which they kind of coexist in the next 5 years. That at least gives people choice, right? Like we should be able to choose. Maybe you choose something that is not as like seamless from a UX standpoint, but I should have the ability of saying, look, I don't want to disclose all this, but you should be able to still accept it as an alternative. That's at least like how I hope the world goes. And I think that also means that in certain countries, you will have better kind of systems than others. But I think there's also a really unique opportunity in which we can say, look, like we can actually have more interoperable standards across different regions and jurisdictions than we've had in the past. And I think that to me gets very exciting when we think about kind of the concept of really broader like network effects of that.
I'm hearing from you a lot that we need to take action, and the moment is now. So maybe I would like to invite you to think about one regulatory requirement you think we could redesign. You can ZK approve. Which one would you pick and why? Which one would you start with?
Maybe something around like investing, accredited investors attestation, because it's very simple. I think it's pretty easy to prove. And I don't know that there's necessarily a KYC requirement if you already know the person that you're making a private offering to. So maybe there's a little bit more flexibility in terms of what the current law requires. So yeah, I think I would pick that.
I would say maybe source of funds, that it's so complex, at least here in Latin America, it's a headache. So maybe, yeah, having a better way to prove that my funds are not coming, from illicit sources or illicit wallets. So I can prove the regulators or the bank or whoever wants to see my information. Okay, these funds are coming from, let's say, my employee, and his funds are coming from this other maybe direction. This is all clear, and I don't have to disclose, all my historic data or my financial information. I think that will be like so a killing use case, and will be so useful for us, because sometimes it's very difficult. And I say this for me specifically. I'm Venezuelan, so I have to leave my country because of political persecution. And basically, I left my country only with my wallet and a suitcase, and I was able to come to this country with my wallet. So at the first moment when I wanted to do some transactions in Argentina, like, for example, taxes, like buying my first car, it was for me kind of difficult to explain regulators in Argentina where my money is coming from, how do I earn it? It's kind of difficult. So I think if we found a way to use the technology, at least for proving that my funds are not coming from my illicit transactions, that will be, for me, one of those killer use cases.
I mean, I've already talked a lot about KYC, and that's a whole edifice, but a lot of that I think could be vastly improved by providing, an attribute-based system rather than an identity-based system, like proving your risk, not proving that you are exactly who you are, because that's not actually as relevant to a bank as the question of whether you are 6 steps away from Hamas or something like that, right? I think another really kind of like provocative and interesting one that I've heard is, what if we live in a world where we have tokenized equities, and we have brokers, and the brokers actually don't know the people who they're doing this brokerage for, but they have tax reporting requirements. The broker could offer their customer or their user the correct 1099, the correct third-party tax reporting form, and say, you're going to file this with the IRS by appending your personal information to it, which we don't have, so that the IRS ended up getting a complete picture, both the person and the tax liabilities. And the only way you're getting paid dividends on chain is if we hear a callback from, say, some registry that's maintained partially by the IRS and technology service provider that says that you did end up filing that data. You could have a broker who never knows any of the salient details of the people they're doing brokerage for, that's still fully compliant with a tax reporting regime. It's a very, it's a it's kind of neat. But yeah, it's a little sci-fi as well.
All right. Thank you so much, everyone. I would have loved to continue the conversation, but I see the green light who just changed that it's about to wrap things up. Thank you so much to our panelists. Thank you for staying with us for the last talk for tonight. And enjoy the asado outside.